Hello traders, Greg here with a market update. Okay, so locally here in Australia, we did have an RBA meeting yesterday. So look, they kept rates on hold at 4.35%, which was pretty much as expected. But it was what you can call a hawkish hold in that the RBA still has a tightening bias. So we heard from Michelle Bullock in the press conference, and there's a few key takeaways. One was that, look, inflation is still too high. They don't want inflation embedded. And that also the risks to inflation are more to the top side still. And if inflation did materialize or did continue higher, they'd have no hesitation in hiking rates again. So look, between now and the end of the year, certainly there is still a high probability that the RBA will raise rates again and take that cash rate up to 4.6%. But it is dependent on what happens to inflation. Aussie dollar did absolutely nothing on the RBA decision, went nowhere. Currency markets pretty much dead yesterday. But the ASX had an initial spike higher just on the initial headline that the RBA was on hold. But when obviously got more information that it was certainly a hawkish hike, we did see equity markets come off those highs. So at the moment, it seems as if those record highs up towards 9,300 for the ASX are going to be pretty stiff levels to get through. So decent resistance up there, and I think at these sort of levels at the moment, bias is probably towards the short side for ASX Aussie equities. Okay, today though we have some very big important economic data coming out of the US. That is the July monthly US CPI data. So look, it's definitely the biggest event risk for the market this week, and the market certainly has been waiting for this number. For the headline number, market expects that CPI is marginally going to go lower from 3.5% to 3.4% year on year. And for the core number that excludes food and energy, and the number that the market pays a bit more attention to, that's from expecting that to get marginally lower as well, from 2.5 down to about 2.4%. So the market is going to react, and we'll see the bigger moves, obviously, if we see a print that comes out below expectations or above expectations. So that's what's going to move the market, obviously. Look, if it comes out below expectations, last week we had a payrolls number that came out well below expectations. We had Fed fund futures that were pricing in the probability of a Fed rate hike in September, above around 70% before that payrolls. That's dropped now down to about a coin flip, 50-50% probability of a rate hike. So if this number comes out below expectations, no doubt traders are going to start pricing out that Fed rate hike in September more so. So we'll get that probability obviously going back below 50%. And markets are going to react obviously very bullish with that. So no doubt we're going to see equity markets rally aggressively. Probably see S&P, which is sitting just below record highs, go up towards 7,800 and make new record highs. Gold and silver, if the number comes out below expectations, which have had a fantastic week last week and a good start this week, they're going to love it as well. So we're going to see that rally continue because the market is certainly very bullish and wants to continue to buy precious metals. US dollar obviously will sell off. So that'll be good news for the Bank of Japan because we've got dollar yen that's been pushing back up to 160. So obviously we'll probably see that lower as well with bond yields going lower. So market really will want to see this number coming up below expectations because we will get a very bullish response. On the flip side, obviously, if the number comes out above expectations, we're going to get the opposite of all of that. So no doubt we're going to see equity markets off and probably get hit a lot lower. US dollar is going to be bid, and that precious metal rally that we've seen could get hit very hard and stop that momentum. So tonight, whether it comes out below or above expectations, expect some decent volatility and some good directional moves and opportunities in the markets. So let's see how that pans out. As far as the Middle East is concerned, the stalemate between the US and Iran continues. But the key takeaways there are, one, is that Iran is getting more and more confident that it is holding a strong hand now against the US, and has painted Trump into a corner. So their demands continue to grow for reopening the Strait of Hormuz. Those demands obviously will never get met by Trump. So this stalemate that we're having at the moment looks to be something that is not going to end anytime soon. So oil markets at the moment obviously are reacting to this. And we've seen crude oil have a fantastic rally so far this week, up over 7%. Back above $80, and we're pushing up towards 85. Technically, we've filled one weekend gap lower that we had recently. We've still got another one from the beginning, first weekend of August, that we've got a gap fill up towards $90. So price at the moment is filling one gap. Technically to 85, still got another one up to 90. Price does love to fill gaps. So I'd imagine potentially that's where we're headed next. But no doubt there's going to be some probably very stiff resistance around that $90 mark. But no doubt at the moment, traders are losing a lot of confidence in Trump. And also, traders are now not believing a lot of Trump's headlines and statements because obviously, they've turned out not to be true on so many occasions, and there's so many times that boy can cry wolf, and it seems we've got to that stage now. So, traders aren't reacting to, Trump's headlines anywhere near as much as they were before. So look, bias is to buy crude. Obviously, good levels are at the moment. Solid support seems like it's around that $80 mark, and yes, potential short-term targets up towards $90. Anyway, tonight, again, key event risk is that CPI, and depending on how that comes out, it's probably going to give us direction for markets for the rest of the week, especially in the currency space, equities and precious metals. Yeah, good luck with your trades. We'll check back with you shortly.